Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Wednesday, the 7th of April, 2021. Now, I feel like a DJ. At times, I do take requests. So if you go onto your YouTube channel, where a lot of these are posted for the general public, and you put in something you'd want me to cover, I'll look at it and decide if I want to do it. I had someone that wanted URA, so I'll give it a look-see for you today. That's the uranium ETF. We still see GameStop ever since they announced that they're going to put out 3.5 million shares, just go one way, back to the downside. We're in one of these patterns where the markets are just sort of drifting. You have paid attention to the volume in the stock market, how light it's gotten over the past 48 hours. Don't know if that's Easter, what's going on, as people are still, a lot of them on vacation, just getting back as the kids come back to school. I know in Chicago, a lot of schools, they go back on Monday, so we'll see what goes on there. But let's take a look and see what we have here. And do remember, I am going to open up very shortly something called like What's Up. And the idea there is you'll be able to come in and ask questions, and I'll answer the questions you've got for a 15-minute period or so, and then we're done. And I don't know how often I'll do it, but if it has a good following, we'll keep it up for quite a while, that's for sure. So we'll see what goes on there, but an idea. So in GameStop, you've been with the lower highs, lower lows. You've really developed more or less sideways action. We know that that blip back here, where you got up to near $500, okay. But now the market's more normal, and you've got a better board. They're about to have $1 billion of firing power with this stock offering. So interesting time. If you were to get over 192, you could end this swing to the downside. But if not, you could be headed back to the 140 level. Now URA, if we take a look at this chart, here is a market that threw out higher lows, and if we look here, 1917 was the high, and this is March 31st, so we're not going back for any length of time. And if we take a look right here, it was 1913 also, so you came down, you had a double top. If you take this out, this 1913, it changes the pattern. Now you've got the confirmation of higher highs, higher lows, a potential of the upper Bollinger Band could be there. And look what you did. You went up there on Monday, and now you're backing away from it as you should. Overbought market. What do I teach you on the first time you hit a Bollinger Band? Out you go. And at the end of this different review that we do today, there'll be an ad about my enhanced Bollinger Band course. I'm going to show you things in Bollinger Bands I don't think you're going to pick up anywhere else. It's my take on them, everything I've learned in the past 3 to 5 years, as I've really spent a lot of time on them. I've been teaching Bollinger Bands, I don't know, for about 30 years. But then I looked at a few things, especially as I got more into the SPDRs and ETFs, and some things became fairly evident to me. And there is a slight difference between how SPDRs and ETFs handle them from futures. And I teach that all in the course, 13 chapters, it's easy. By the way, if you like these videos, let the world know. Click a yes or something here. So, as far as I'm concerned, the pros took money off the table. The trend is up. It's too overbought to attract them back to the market there. I think 1940 should attract the next level of buying. In PAVE, I think the market's making a short-term top. I said this to you yesterday, and I'm following through with it. You had an outside day down, and you're following through. The pattern is suddenly changing. You've got the swing line because of the, let's call it the legacy of higher lows, and you still have that one, but you have a new development of lower highs. I think the smart money's gotten out of this market. You'd have to get back over 25.65 to get something going again, and the odds favor that if you can clear through this 24.91, you go back to the 18-day average to regroup. When I take a look at where the Bollinger Band is, take a look at where the failures are happening, take a look at momentum, overbought. So that's what I think could be happening. In THCX, this market just is sideways. And I think it can stay that way for a long time. This market had a heck of a move. it retraced everything, as you can see. Not the complete lows down here, but these lows went sideways for a while too, as you can see. So this chart seems to like to develop areas that it builds new bases from. This could be what we're in. We're not trending at this point. In SMH, do I ever tell you to buy an upper Bollinger Band? Never going to happen. So you got up, you had a couple of days over it. You were over it here and here. And the odds favored today a 97% chance it would fall back. How do I come up with that math? I count each successive close over a Bollinger Band as taking away one of the 5 percentage points that the market will stay over it. So 5% of the time over it, then 4, then 3. So 97% chance, and it pulled back. That doesn't mean it's weak. It's just that if you're a buyer, if you had the arrangement here to be a buyer on the chart, traders will look to support it on the breaks, and that's what I still think is going on. Did we ever embed? Well, both numbers were over 80 today. Both numbers were over 80 on a Tuesday, and both numbers were that way on Monday. Were they that way the day before? No. So you embedded. You converted the market now from being overbought to locking in a bull trend. So you're no longer in the overbought status. Until the red line closes back under 79, I think the breaks in the market will be bought by the pros looking for a challenge of the Bollinger Band potential. In XLI, you have the embedded reading. So each time you hit it, I think you fall back like you're doing. And I think the pros will gobble it up until that red line closes under 79. And I think they'll keep completing and trying to get that pattern to complete itself that way. In the energy sector is actually in a bear stage. You've got lower highs, lower lows. Excuse me, I think the pros are short until you take out 50.01. If you do that and you close over 49.99, you negate the downtrend. If the market's going to break further, 47.01 will be their target. On SPY, do you buy over an upper Bollinger Band? That's the first thing. No. Did the market back off and under it? Yes. Is it embedded? Yes. So I think pullbacks in this market are going to be well bid until the red line closes under 79. And yes, I do teach in my course how you come into markets like that in the Bollinger Band course. In EFA, higher lows, higher highs, overbought. First challenge of the Bollinger Band, traders come out. But there's a bigger play here. The big play is what's going on here. This is all sideways market. When COVID ends, I think we'll look back and say this was the base that the market built and the market takes off from this number. COVID hasn't ended. In fact, if you look at Brazil, read the news tonight. The new variant from South Africa has hit there. They don't have enough vaccine for the old variant, let alone for this. And what they're doing is expanding, unfortunately, the amount of burials that are going to go on. I mean, it's a disaster. You know, I feel for the people. You're up here, overbought. Gold, I don't see anything. I see a market that came down, could have culminated a big low. This absolutely could be a pattern where we have finally bottomed out, but it hasn't thrown out a buy signal. And even if it does, I think that the upper Bollinger Band will stop it. So here's what I think went on. I think you came from there all the way down and now just to develop sideways action. That's either going to be a base or a top, dependent on what the gold itself does. GDX, lower low, higher high. I always look at this and I go, I wish the people that might have been in that would be my client, because I'd be telling them, why are you hanging on? You're up to the Bollinger Band first time, just came from an oversold condition, you're overbought against the 100-day average. You may think it's going to the moon, the odds don't favor that, and you've got nothing right here now. TLT, was this the correction? Remember, in this market we came down, and now we're sideways. So you're getting a lot of consolidation moves out of nowhere, which is healthy because there's another leg to these markets coming. And the longer they consolidate, the bigger the ultimate move. I don't consider this to be really trade-worthy. I see the short-term trend is certainly up, but not even able to get to the other Bollinger Band and you're overbought already. FXE, I think that you ended that decline that came just now from just shy of 114 to the 109.5, but I think the 18-day average is where the market's destined to play around for a little bit now. I think it's got to consolidate this, so that's where I think you're at. I'm Ira Epstein. I appreciate you watching. If you like what you just saw, give me a thumbs up or whatever on YouTube, or let people know you like it, and I'll talk to you tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.